Most traders jump into the trade. I always do the opposite. I start with the full picture, from the weekly context all the way down to the 15-minute time frame. And only when the market gives me all the possible clues, I strike. In this video, I'll break down a full trade from start to finish and show you exactly how W free flow helps you to go from confusion to your first consistent profits. No fluff, just the strategy, just the framework. By the way, my name is Alex and I spent last 7 years trading one single instrument, S&P 500. I don't trade crypto, I don't trade forex, I don't trade anything else. I trade only futures. And inside W Free Flow, I teach traders how to master one strategy, one instrument for one single goal, consistent execution. We don't use any signals, we don't use any indicators. We read the story behind the price each single day to know exactly when to act. In this video, you will see how I analyze the market across multiple time frames, the exact logic behind the trade, and why I waited, the real life trade start to finish, and what made this one high quality. Plus, I'll walk you through the framework I use every single day so you can start building this skill for yourself. Now let's dive in. So first of all, we always start our analysis from the weekly time frame. We always analyze four main time frames: weekly time frame, daily time frame, hourly time frame, and 15-minute time frame, to understand what is going on, to collect the data, to collect the context, to understand the auction, to understand what is going on behind the price, behind everything we see every single day. And we always start our analysis from the weekly time frame. So what we see on the weekly time frame? Here we see a potentially balance forming. Why potentially? We have the first factor met here. We had an impulse preceding all these, and now what we see potentially are fix and an initial trade. I'm always assuming you are new to the channel, so I'm repeating every single concept. Hope you are I hope you're all right with that. Okay, so what is a fix? Fix forms when institutional traders fully or partially close their positions. Then we see this counter-directional reaction. Then we see an inertial trade. What is an inertial trade? An inertial trade is a trade taken in the same direction as the previous movement. Why we can't classify these as a balance? Because we don't see a second segment. Only when we see the second segment, responsive activities, one or two from one on the both sides, can we classify a range as a balance. Okay, now this is a macro model, by the way. Weekly auction, this is the macro model, and the task of this auction right now is to reposition this key resistance level 6092. All right, so and here on this time frame we don't have any factors for sell. We don't have we have factors weakening the buy, but we don't have any factors for sell. All right, daily time frame. And here what we see here is a balance. We can classify all this movement as a balance. What happened here? We have an initial impulse, and this is the first step. This is the step preceding every balance. Okay, then we see a fix, an inertial trade, and this is the first segment of the balance. Then we see a responsive activity, seller's responsive activity, and the buyer's responsive activity. So what is a responsive activity? This is a response from an institutional trader, and that's it. Actually, we call it a balance as we follow the auction principles, but actually any balance is a struggle. It's a huge struggle, and we need to understand who to follow, the buyer or the seller. And in this case, we have two responsive activities: seller's responsive activity and buyer's responsive activity. And the current task here is to build the third segment, and then reposition this key resistance level. And that's it. That's it. And here we have one factor for sell's responsive activity. Let's move on. Hourly time frame. Hourly time frame. In the current contract, we don't see any structure here. We see a volatility, but even if we have volatility, the task of any volatility, be it capture volatility, directional volatility, standard volatility, doesn't matter. The task of any volatility is to reposition the key support or resistance level. In this case, we need to reposition this level. And as we can see in the current situation, it never happens because we see this rotation, but this rotation may lead the auction to repositioning the higher resistance level. So the price here is to reposition this level 61.37. 61.37. Now let's move. And we, as you can see, we don't have any factors for sell here. 15-minute auction. This is the closest auction we always use every single day throughout the week to take our decisions. What happens here? Here we had, previously we had a directional volatility, and then, just a second. And then repositioning happened. What is the next step after repositioning? After repositioning, the next step after repositioning is an initial fill. What is an initial fill? Initial fill happens when institutional traders initially fill their positions. It is what it is. And the next step of the auction is retest and move continuation. Here we had initial fill, retest, and move continuation. And the question here is whether all these will create a new balance, 15-minute auction balance or not. Task of the current auction is just to continue the movement, to support and continue this movement. Now, so we understand. Now we understand what is happening throughout the whole auction. Once again, on the weekly time frame, we don't have any factors for sell. Fix can never be a factor for sell. All right. We have weakening factors. Fix is a weakening factor, but we don't have any factors for sell. Here, on the daily auction, we have a almost fully formed balance. We can classify this as a balance, and the task here is to build the third segment, which can take different forms and reposition the key resistance level. Hourly time frame. Hourly time frame, there in the current contract, we don't see any structure. We see a capture volatility and no repositioning of this level. So the auction may continue the movement up on the directional volatility. So the task is to continue the movement and reposition the higher resistance level. And we understand what is happening. All right, we understand what is happening. And on the 15-minute auction, we also don't have any factors for sell. We have weakening factors that weaken our buy priority. Our priority is buy because we understand who to follow. We follow the big player, at least a contract player, at least a contract, but most likely a contract plus player. And it also might be a daily institutional player. What it means? When we talk about the big player and when I say we follow the big player, it means that this priority can be held throughout the whole contract if we speak about the hourly time frame, or it can be held throughout 3 contracts maybe. Okay? The main priority, the buy priority. It means that right now we don't look for any sell opportunities. Okay? So let's go back to the 15-minute auction. Here, oh, yes, our main priority is buy. We understand that what is happening? We analyzed all the time frames. We understand who to follow. We follow the buy. We have some factors that weaken the buying activity. And in this case, the factors that weaken the buying activity is that this level is not repositioned. Daily auction, this level is not repositioned. Hourly auction, this level was not repositioned. We see this indecisiveness because any directional volatility is always indecisiveness. And here, this key level is also was not repositioned. But taking into account the complexity of the task and the task of the macro model again is the weekly auction is to reposition the historical high, which is a huge task. But we follow the buyer. In the current activity, we don't see any activity that would tell us we need to change our priority to sell. No, our priority is stable. Nonetheless, we have some weakening factors, some factors that weaken the buying activity. It doesn't mean we can look for any selling opportunities. I hope it's clear. What happens here? 15-minute auction. 15-minute auction. Okay, move continuation, and the current task is to reposition this level. Now we need to understand where to take a trade. And we move on to the 1-minute time frame. It was Monday. What you can see right now, it was Monday. Now we need to analyze the current activity under the microscope. This is what we do every single day. This is what I do every single day and teach in my W3 flow system. What happened here? It was a standard volatility. It was not a tradable day. Standard volatility. The closure is neutral. It's above the point of control and inside the value area. And we see this little counter direction. Nothing special. Nothing that can complicate the movement for Tuesday. But we need to understand that right now, take a look at the 15-minute auction. We are almost close to this key resistance level, and this is important. We already saw this counter direction. We already saw this little counter direction, and the question is right now whether the auction will react to this level or not. And we do not guess. You see, the beauty of this system, we never guess. We gather clues throughout the whole auction, starting from the, as you already saw, starting from the weekly time frame and ending with the 15-minute auction. To understand what is going on, then we see who to follow. And then we need to understand where to take a trade. As I already said, the auction, 15-minute auction, can bring the price here. And then we need to analyze the activity. We need to analyze the volatility, the reaction, volumes, the volatility map, everything. This is what we do under the microscope using the 1-minute time frame chart. Once again, Monday. What happened on Monday? We see this closure, neutral closure above the point of control. The overnight volumes, which are here, are positioned as selling volumes, but we don't see any super counter directional volatility and no complications. So we need to build two scenarios for Tuesday. So to know when exactly to take a trade, we need to identify the levels where to take a trade. We need to identify the time when we can participate in the market. We need to identify the conditions when we can take a trade. Okay. And for this, let's start with the scenarios. So what can happen? Let's identify our levels. The first level here, an aggressive buying level will be approximately here. Yeah, approximately. Let's change the color, because for the 1-minute time frame I use this gray column. Um, 15-minute auction. Let's just verify. Yeah, this is the level of a potential aggressive trade. Now we need to understand where we would take a conservative trade. What a conservative trade means. That we buy without any hesitation. And that's it. If the price shows us certain conditions, we strike here. And this level for us will be a local resistance level. And if the price goes above this level, we buy without hesitation. We just analyze the value. Of course, we analyze the volatility map, the volumes, everything. But now, right now, the first task is to define the key levels where we buy conservatively and aggressively. Now the scenarios. Now we need to define two potential scenarios. The first scenario, from what I see right now, can be this. Ideally, the price would rotate somewhere here, and then at about 9:30 we would see some buyer spike here, some rotation again, and then move continuation. An impulse, an impulse. And in a negative scenario, we can see something like this. The price can reach this current local resistance level, show us some volume, show us some selling spike, and then go down. And in this case, we of course would shift our timing to maybe even to the second half of the day, after the 12, 12:30, 12:30, or 11:30, 11:40, something like that. But we need to analyze the activity, the current activity, and then take decisions. But another scenario, taking into account that this counter directional volatility is not aggressive. We don't see any aggressor here. We don't see. And taking into account that we have this space here up to this level, most likely we will see the move till here on Tuesday. And taking into account, we also take into account the rhythm of the week. Every week, as any dance or any song, has a certain rhythm. And my prediction for this week was Tuesday, Thursday. We gather all the clues. Then we analyze the current activity under the microscope. We have a certain priority, which is buy in our case. When we have all this information, we also take into account the rhythm of the previous week, because weeks hardly ever repeat the rhythm. And in this case, my prediction for this week, for the rhythm of this week, was Tuesday, Thursday. Ideally. But if we see that something goes wrong, we just adapt, we adjust, we never force the market to our predictions, to our mindset. All we can do is to gather clues, have all the scenarios, and be prepared. And if something goes wrong, we just shift the timing or stay on defense, and that's it. We don't, you see the beauty, we eliminate the emotions, we eliminate everything from here, every guesswork. If of course you do the homework, if you do the analysis like I do. It takes time, it takes dedication, consistency, and everything. Let's get back to the charts. So we have the two scenarios, we have the levels, and yeah, once again, what we can see is this. I didn't finish my thought here. Yes, we can see this, but from what I saw, from my experience, and taking into account that this Monday's counter-directional activity doesn't create any complications for the 15-minute auction, I assume that the auction can do something like this. But I don't know. I don't know. I don't guess. All I need to do, I have the levels, and in this case, I'll just shift the timing, as I said, to 9:30, and see the reactions and everything, and then take a trade. So let's see. Let's trade the day and see how it goes. We have the levels. We have everything. This level, I need to remove it. Okay. Let's just see how it goes. Now, see what happened. Remember the local resistance level. During the pre-market session, and at the very beginning of the New York session, the price reached the local resistance level. Doesn't mean we need to rush to sell. Of course not. Of course not. We have a priority. Our priority is buy. We know who to follow. We follow the buy. We follow the institutional trade. All right. We can't sell here. All we need to do is to watch what happens next. Let's see. We do not rush into trades. Take a close look at what happens right now. We see this volume build up. The auction builds some volume. We see this bias spike. You see, someone was trying, intraday players, retail traders were trying to sell here. You see these volumes here, you see these volumes here, you see these volumes here, these. But then, silently, an institutional intraday player came. We see this volume and then this activity. I decided to wait and to take a remember we had levels we had this is this is a conservative level 59 51. This is a conservative level. Now we need to see to analyze the reaction. So you see the auction already brought the price above this resistance key, this local resistance level. Then we see this volume. Now we need to see how this volume is positioned. And if it is positioned as a buying volume, we take a buy without any hesitation. Let's see. Yes, right now, we are taking a buy right now. We put our stop just below this volume. Let's see. 10 ticks. Our stop loss is 10 ticks. Now, and our target level is this level, 59.89. Let me explain why. As I told you previously, we have this counter-directional activity here. This is the first counter-direction, this is the second counter-direction. And this counter-direction is not confirmed yet. And we understand that taking into account the complexity of the macro model of the weekly time frame, and this is a historical high, we assume that we can see some counter-directional movement again. So this spike can be confirmed. We do not take any additional risks, and we put our target here, approximately 59.89. This is why we put our target here. Now see what happens. Yes, this is exactly what happened. This is exactly what happened, and we don't need anything else. You may say we caught this impulse, but we didn't catch anything. We analyzed the whole auction. We analyzed everything from start to finish. And this allowed us to take this beautiful trade. Now, after watching this, you have three options. First of all, if all this made sense to you, if everything I explained to you, if you like how I do it, if you resonate with the auction principles, if you resonate with the volume profile, if you want to see the market transparently, if you want to have an evergreen system, you have three options. The first option is you can go to my educational playlist and watch all the videos one by one and start applying all the principles I'm speaking about there. Also, watch all the videos like this one because here, with real examples, I explain to you how it all works. And this way, on your own, you can start trading profitably. It will take more time, yes, but you will be able to start trading profitably. And the second option, you can go and grab my starter kit, which includes a weekly trading plan and daily trading plan templates. All you need to do is to fill them out, and also we in the starter kit you will get all the links to all the necessary resources, all the necessary videos in the right order, so you can follow them, learn them, and these starter kits cost almost nothing. Or the third option, you can join my 10-week program. Yes, 10-week program where I teach you how to execute, where you will learn how to execute your trades with 80% precision. Yes, 80%. I don't take a number here, 80% precision. This is, for many traders, this is almost impossible, an impossible number. But this is what I teach. 10-week program. I think by the time you watch this video, all these resources will be available in the description. So that's it. See you in the next video. Bye and take care. Stay profitable.